Good morning and welcome to Saturday, May 8th. Sounds good. All right. You should be hearing me. You should be seeing a little slide there that says Saturday Morning Coffee at DTS. Haven't done one of these in a while. I forgot just how long ago it was. It's been a little bit. If you're newer, this is just kind of an informal get together. There's not a topic. Wednesdays, about every second or third Wednesday, I do a special presentation where there's an announced topic and we cover something. The Saturday coffees are kind of, I don't pick a topic, and then when I don't pick a topic, of course, what happens is, I think it says it on this slide here even, is that I just get a ton of things kind of pile into my head to talk about, and I usually pick one. And then when I wake up Saturday morning, I usually put a couple of slides together, and that's exactly what I did this time. This event is that exception where I don't have a topic. A common email comment of late. So this is what I'm looking at today. I'm going to talk about 20 minutes, I would guess, and usually I go beyond that, so maybe 25. And then I'll have some time for any questions you want. And we try to finish this up in 40 minutes or 45 so we can all get on with our Saturday. And by the way, happy Mother's Day to you mothers out there for tomorrow. Tomorrow is Mother's Day. And also, if you are newer, there's always new people falling into DTS here, and I do want to make sure that you are familiar with the free stuff page, and I'm going to dump that little link here for you. Be careful once you go there. Some people tell me they don't leave for a whole week, so be careful if you go there. If you're daunted by the amount of information there is a section called the Hall of Fame, which was voted on by the current members at the time as the 5 best educational events out there. So have fun. So let's get going for today. Here's the comment that I get a fairly frequent amount. It goes something like this. I am new and watched a lot of the videos on the free stuff page. Impressive, but I've had some training and I'm clueless what you're doing. Maybe some of you are thinking that right now, and if that's true, just hang on for a minute here. There's a reason for that. Remember, I threw this together this morning in just a few minutes, so if you have any issues with the grammar or typing, just keep them to yourself. There's a reason for that. It has a lot to do with the prior event that I did, and one that I did for seminar program members, and then showed you the highlights of the one that I did for the seminar program members. So there's an event I did that partly covers this, and there is also a topic that I did to the seminar people that I showed you the highlights of because I thought it was an important topic, and we'll get to those in just a minute. So first, let's take a simpler approach, and it is also why understanding this makes you a timeless trader. You never have to relearn anything or wonder why something isn't working. Yeah, thanks, Eric, for filling in there for me. An analogy. Let's look at buying a house. And for you seminar people, that has nothing to do with another analogy I use with houses. Let's take a look at buying a house. Your friend is moving, and he tells you he's buying a house. He gives you a list of everything he is looking for because you're going to help him on the internet. Hey, his list is very long, but you do your best to help him. Great. You eventually get frustrated. Maybe some of you have been in this situation because you naturally can't find everything on his list. No house is perfect. And your friend keeps rejecting the great houses you find that you think are just what he wanted. As a matter of fact, every house that you chose had 90% of his list requirements. So you following this here, you're helping your friend, he gives you a list, you come up with all these great choices, and he rejects them all. Then finally he buys a home. And now you're really confused because it doesn't have the stainless steel appliances that were on his list, and it doesn't have a fenced yard. Those are things on his list, and he bought a house without them. And your house list had that list. So you are very confused. So he explains, yeah, the kitchen in the house I bought is not perfect. I like some of yours better. But I wanted a 2-story house. And I wanted to be in the Denver area. You found me a house that was in Buffalo, and it was a ranch house. And you complained back, hey, but I got all but 2 things. You had a list of 25 things. I got over 90% on your list. And your house is only 80% that's on your list. I don't get it. I'm not your friend anymore. So I think most of you kind of get it with a house. And you think, well, that's stupid. Of course, I get that. Of course, your friend isn't happy with what you did. But to me, when people ask me chart questions, I feel kind of the same way. I'm kind of like, well, yeah, you're buying a ranch house in where did I say? In Buffalo, and you wanted a two-story in Denver. So of course this isn't what I'm looking for. When you glance at my trades, you may be looking for a consistent cookie cutter concept, but those don't work. If you're thinking, you may be thinking about a buy setup or a breakout, and sometimes some of these things are called that, but it doesn't even seem familiar to you. You may recognize this. Now, seminar students, don't talk for a minute because you will know the answer to this. So let everyone else get a crack here. I'm sure if you've been out there, if you're here listening, you may be brand new and curious, but most of you are people that have been dabbling in the market or looking at technical analysis or trying to find your place to either manage your long-term investments or to try and make some money day trading, whatever it is. And you probably have run across some type of a buy setup thing. It could be called a lot of different things, but buying a pullback trading, getting wholesale buy setups, whatever it is you call it. So you may recognize this right here, having an entry, a target, a stop. But if this is all you know, you're likely losing money at a very rapid rate. So let me ask you a question just for fun to try and help make my point a little bit. Again, seminar students, hold off until I say anybody. But for those of you who are not a seminar student that have been dabbling in technical analysis, let me ask you this thing right here where you're buying a pullback. What is the most important part of that concept? What is the most important part of this setup of buying a pullback? Anybody go ahead, let me get 5 answers out there. Somebody who wants to just take a stab at it. What do you think is the most important part of this pullback? Because this is where I will frequently get comments from people that are saying, boy, that's not at all what I thought mattered on this. We have an entry, we have a stop, where the pullback goes to. So far, Caden, that's the best answer so far. But we're still not there. Support, a lot of pullbacks won't have support, Joe. You have a wide range bar that ignited a move, you're not going to find support anywhere. It happens during an uptrend. Okay, so Steve's getting closer, and John's kind of close. One time frame. Okay, all right. All a lot of good answers. Anybody, everybody, including seminar students, do you have the exact wording for me? Thank you, Stephen P. Right, see, seminar students, bam, bam, bam. Because I pound that into your head in class, right, Steve? How many times did I say this? It is the quality of the trend that you're playing that matters more than anything at all. As a matter of fact, if you just think about it for a minute, right? If I ask you for definitions of uptrends, which I'm not going to do, 100 of you would come up with 100 different definitions for me, probably, I imagine, right? There's 70 of you here. There's a very specific concept of what I look to be an uptrend. But if you think about it, something we'll all agree on is an uptrend, however you want to define it. One thing we all have in common is that we're always making new highs, right? Everybody agree with that? We're always making new highs, right? Agreed? I don't care how you want to define an uptrend. And by the way, most of you, I probably wouldn't agree with your definition, or it just wouldn't be sufficient enough. As a matter of fact, in class, remember guys, in class I show a picture of an uptrend that at a glance looks beautiful, and I explain to you, no, this is not what you want at all. So you're always going to have these new highs, and there'll always be some kind of pullback, whatever it looks like, right? But if you think about it, if you are in an uptrend, and if you didn't screw up that part of it, and you buy a pullback, what are you guaranteed? If you just close your eyes and walk away, not that you should do that, but if you were to close your eyes and walk away, if I guaranteed you that you are buying an ongoing uptrend, and if you bought some kind of pullback, no matter how bad you did, no matter how terrible it was, no matter what the pullback looked like, no matter where it landed, if you forget support, you forget everything else in the world, if you buy an uptrend on a pullback, what do you guarantee? What do you guarantee? Well, if I told you it is a pullback, you're guaranteed to make money, right? Isn't that true? If you buy some kind of pullback, and I'm guaranteeing you you're in an uptrend, it means you're guaranteed to make a new high. And doesn't that guarantee you'll make money? Isn't that true, everybody? It's not true? Well, I said, Steve, if you walk away from it, Stefan, I said if you walk away from it. If you get a pullback and you make a new high, mathematically you're making money. So my point is the only thing you can do is screw it up by mismanaging it, by getting out, by getting in such a bad point that your money management doesn't allow you to stay with the new high. Does that make sense, everybody? You get my point? I'm not saying you won't screw it up still, but I'm just saying this is why it's the most important thing, because you're guaranteed to make money if you buy an uptrend. Now, you can still screw it up, I agree. And another comment I make is the entry is everything, which it is, because if you don't get the right entry, you may not be able to withstand. In other words, if you, I don't know why I have pink up here, but if you get in way too soon on your pullback, right, you may be proven right eventually, but guess what may happen, stuff, and what's going to happen probably to the average trader, right? You don't have the confidence to know you're going to a new high, and your money manager may say, man, I'm down 5 times the amount of money I want to be down. I can't take it, and you get out. And of course, you'll get out. I guarantee you'll get out within 10 seconds of the low, and then you're going to go higher, and then you're going to look back and shoot yourself, right? So that is the most important part. And when I get people answering the question, I hear things like 3 red bars and quality, consistent, and all that stuff I teach, and it's good. It's nice to have because it helps you sustain your money management better. It can help you make more money. But if you're buying the most beautiful pullback in something that's not an uptrend, you're guaranteed to lose money. Does that make sense? What I talk about, and this, I said this is trying to tie together for you a couple of prior presentations, because what I always think is important is, you learn stuff. And right now I'm talking to the group of free DTS members, not seminar students, but even if you attend all these events, there's an awful lot of information out there, and in a vacuum you may understand it, but the question often becomes, how do you tie it together? How do you apply it to a chart? And this is what I'm trying to do here today for the free DTS members, is to say, look, here's a couple of prior events, and here's maybe how you tie them together a little bit. One of the events I did was called the language of charts, and it talks about cookie cutter patterns, etc. And it says here, the opposite of memorizing cookie cutter patterns that are easy to learn but rarely work. In other words, the language of charts is described here, and then it says the opposite of the language of charts, which is my name for what I teach, is memorizing cookie cutter patterns that are easy to learn, but they rarely work. You may think they work if someone shows you all the examples that work, but they leave off all the ones that don't work, right? I mean, I can show you any concept in the world and do a presentation and show you 35 times where it worked, but that doesn't prove anything, because out of a universe of 1,000, if it worked 35 times and didn't work 965 times, it's not a very good concept. Cookie cutter patterns, are these things, head and shoulders, cup and handle, double tops, double bottoms, triangles, flags, pennants, blah, blah, blah. All of those things, and here's the line where I'm tying this together with my house example, is that cookie cutter patterns are like getting a fenced yard and stainless appliances in a ranch house in Buffalo when you wanted a 2-story house in Denver. It's kind of what it's like. It's the tail wagging the dog, if you will. And people get all hung up on trying to learn the simple shortcut thing of cookie cutter patterns. But if you're buying a head and shoulders higher at a weekly, on a daily chart, and you're doing it at a weekly downtrending sell setup area, it may look like a head and shoulders on the daily, but I guarantee you when it pops above your entry point, you're going to get slaughtered. How does this one-dimensional pattern or any of them tell you if there will be selling when you cross that line? Big money funds, institutions, they don't have that line drawn there. They are making the chart, not following it. They are making the chart, not following it. Our job is to follow the big money. So we want to see the reaction that happens when that line is crossed. Or, on the other hand, we want to know and anticipate what's happening so that we can get in earlier. And then if this is not working out right, we can get out maybe at a small profit or at a small loss rather than taking a full club on the head. The concepts, just like that I did, and again, this is actually part of a presentation before, and this is a separate presentation I put on for the seminar students, and I decided to give you kind of a watered down version of it. It's called the 3 parts of every strategy, I think. And again, you can go find that in the free stuff page. But to find a picture of power, to find the time frame of reference, and to find a great entry. And that's how I think about things. And that's what I look for. And the equivalent in our real estate thing, is to find the area you want to live first, and then find the type of house you want, and then worry about the appliances and that stuff last, because you can always buy new appliances. And I know this analogy isn't perfect, but in terms of thinking kind of from a top-down structure, I'm finding pictures of power. In other words, I'm finding a chart where I look at that bear bull battle across multiple time frames and I say, you know what, this thing is going higher. You know, when you pull out a chart, everyone, when you pull out the average chart and you're an excellent trader and you know all the technical analysis you could ever learn, what percentage of the time do you think you have a really good handle on where that chart's going to go? What percentage of the time, if you just pull up a random chart, if I showed you a chart right now, just pulled one out, just made up a symbol and pulled it up, what are the odds that you could tell me where that would go with the confidence to make money on it? What percentage of the time do you think you can pull up a chart and tell me where it's going? Assuming you know all the technical analysis you would need to know to be an excellent trader. What percentage of the time? What percentage of the time do you know where it's going? Do you know what? For me, ask me. If you showed me a chart right now, what percentage of the time could I say to you, you know what? I would take that trade tomorrow, and here's where it's going. It's going higher to here. I'd enter here. It's going higher to there. I'd enter here. It's going lower to here. Yeah, exactly, Caden. 3% of the time is approximately right. You've heard the story that the market is a random walk, right? It's true. Most of the time the market is a random walk. I accept that, right? Yeah, that's true too, Mike. You never know. But I guess maybe I should have phrased that. When do I feel the probability is so high that I would take a trade? And the market is a random walk. And this is where people lose confidence in technical analysis because they never understand it well enough, and they think that they have to pull up their chart of Allstate and they have to know where it's going because that's what a friend recommended or that's what they have in their portfolio or whatever it is. And the truth of it is, most of the time, I could give you a lot of great comments on any chart. I could tell you its trend, and I could tell you if this, then that. But most of the time, I wouldn't take a trade on it. I wouldn't know what to do. See, we're looking for the exception. We're looking for the times where big money is coming in and they have to sell something or have to buy something and they can't hide it anymore. That's what the picture of power is. There's 4 different pictures of power. I'm not going to go through them now, but there's 4 times where the chart just screams at you, this is going higher. And once we know it's going higher, the next question becomes, well, where is the approximate area that I need to be looking at an entry point? Do I have to be aggressive and kind of chase it? Do I know it's going to come back after it moves higher or come up after it moves lower? And then once I know the general area, right? So I want to find something where I know I have this big, powerful thing going on. In other words, I need to find the part of the country that I want to live in. And then I need to find out, well, now that I know it's moving higher, where do I find my entry? Is it going to be here? Is it going to be here? Is it going to be up here? What's it going to be? And then the general area for the entry. You know, what kind of house do I want to live in? And then I need to find a great entry that really allows me to make money from that move. Because the entry will say, if you mess up the entry, you may be right about the move, but you have to get out because you're down too much money. Or you may be right about the move and you may get an entry, but you don't make any money because you're just way too late. Oh, Caden, that's a good question. Only 3%. No, I don't think that's the same. That's a tough one. I don't really know the percentage on that. See, the reason I know 3%, Caden, I don't make that up. I mean, a lot of numbers I make up. No, just kidding. But you know, they say 90% of all statistics are made up on the spot. But 3% is a real number. And if you said that number, you know why. Because I scan about 1,000 charts every night. And guess what? I don't even flag 30 of them. I mean, to be honest with you, it's more like 20 to 30 in that area. So I only flag 20 to 30 stocks out of 1,000, meaning there's only 20 or 30 stocks out of 1,000 that I even want to look at a second time. And even then, I have to have certain things happen. I have to have the right area occur. I have to have the right market timing, the right relative strength, find an entry, all that good stuff. And that's why so few of them end up being trades. But if I take that handful of 20 or 30, what percentage of them? I don't know. That's a good question. The problem, the reason I'm stalling out, Caden, I guess, is because when you say the right area, the stock always lands in the right area, right? I just may not judge right whether or not it is. In other words, very strong stock may not pull back as far as I want it to. and I may wait for it, but it doesn't wait for me. So did that come to the right area or not? I guess you're saying how often do I know the area and get it right? I don't know. That's a good question. And part of it also is because if you use the right entry concept, the right entry can allow you to be further off from the right area. Does that make sense? That's a good answer. The correct entry can allow you to be further off from the area and still survive and make money on the trade. That's why I think entries are so very, very, very important. Right, Stefan, it happens all the time. I wait for the stock doesn't wait for me, and it goes without me, and that's right. So it wasn't my trade because it didn't do what I wanted it to do. What I tell people maybe a couple times a week in the trading morning, right about 9:28 when we're ready to open, I say, hey, if you're sitting here now and you're contemplating taking a trade the first 30 minutes, you have to know right now exactly what that stock is going to do for you to enter it, right, everyone? And if you don't know, you can't trade. And if it doesn't do what you want it to do, you don't take the trade. So that doesn't mean you're going to get everything that you thought was a great trade, but it means that if you go after the wrong entry, you're not handling it right. The odds decrease of it being successful. The odds decrease of you making money from the move. See, it's not just enough. So many times people get all hung up on, oh, I was right. The stock moved higher. Well, who cares? Who cares? You know, I could teach a 7-year-old to be right half the time about whether a stock goes higher or lower or not. The point is you have to make money from the move, right? And you have to make money from the move without putting yourself in a position where the money you could have lost becomes excessive compared to what you could have made, right? That's right. Exactly, Caden. Okay. So that was my big message to you today, to try and tie together a couple of prior events. And you can if you haven't seen those prior events, they're both excellent events. You can go watch the 3 parts of strategy and the language of charts and any of the other events that I talked about that are on the free stuff page, which is right there. So it's 9:25, and like I said, I want to end this in about 15 minutes at the latest, so we can all get on with our day. Let me ask you guys if you have any questions you want to talk about or ask me, just kind of an open thing here. The next thing I'm going to be doing is Wednesday night. I'm doing an event called Trading Stats for April. I did one similar to this last December. I'll go into some trading stats. It's going to be probably only about 20 to 25 minutes from me, and then I'm going to have a guest speaker for the first time ever in DTS history, and it is the gentleman who will explain to you how, if you want to day trade and you don't have the capital to do it, you can do that. Okay, it's the same person that I've been referring to for. And this isn't from the letter, right, Andres? I'm talking about the QQQ on May 5th. So, Andres, if you would if you have an hourly chart up, and anyone who does, yeah, I'm sorry, I'm not going to pull up my charts because I'm not even logged in on that computer. It would take me several minutes to do all that. So um, if you would take and draw a line at, let's say, 335 and draw it on an hourly chart, and if you draw that line back to, boy, all the way back to April 15th, you're doing that? That is a wide, big hourly support area. Agree? You know, give or take a buck or two. I mean, we're not, this isn't tight roping. Okay. So we gapped beneath that area on May 4th, right? So when you gap beneath that area, there's a couple things that happens. This changes, you're going, and this is actually a mattress, Andres, right? You would know it as a mattress if that helps you there, because you understand that, I think. So we gap below that, and that changes everyone's expectations. Let me do this here. I can do this. Well, I'm not going to pull up the chart. I can draw you an approximate representation here of what's going on. So between April 15th and May 3rd, right? We had this approximately, right, Andres? And then May 4th, we gapped down. So here's what's going on here, guys. Through this period of time, there was this pattern where there's, well, this is the QQQ, Jim. Andre's asking about a comment I made in the letter that goes out, so it's a QQQ. So again, this is the hourly chart, the 60-minute chart, and this gap down day was May 4th. So there's certain expectations going on. Remember, if you saw that slide, it says that language of charts is a constant analysis of the battle between the bulls and the bears across multiple time frames. So there's expectations that were set up, right? So for this period of time, people were probably thinking short up in this area, right, and long down in this area, right? And those expectations are all set up, and people are doing that. And then all of a sudden we gap down to here. We instantly teleport to here in the morning, right? There's no choice. So anybody, and we had just come down to this area. So there are a lot of people who would have bought this area, right? Matter of fact, you wouldn't be stupid to buy that area. We came down there on the first, which was a Friday, obviously, right? Or is the second a Monday? What dates are we on here? The second was, the third was Monday. Yeah, so Monday we closed up in here, right? And the expectations for all these people are going up to here, and all of a sudden we gap down to here, right? And when you gap down, there's a couple of things that are going to happen. There are some people who say, whoops, I was wrong, and they take their stops and they go on with life, right? And some people do that. Some people hang on and say, oh, please come back, please come back. Oh, please, Lord, help me, down on one knee, facing east, whatever. And this morning, the market puked lower very quickly, right? So if you didn't get out very quickly, you're stuck. And if you took a trade up in here, you're down a lot of money when it gapped down, and now you're down a ton of money, right? So on the evening of May 4th, well, about noon on May 4th, you're out walking the neighborhood and wondering what to do because you're down 7 times the amount of money you wanted to be down. And then you get a little reprieve and you come back and you close the day, but you didn't come back much, right? You're still down way more than you wanted to, right? So the next morning, you wake up to a gap up. And what do you say? You wake up to a gap up to right about here. What do you say, everybody? I was down 7 times my money. Now I'm only down twice the amount of money. Yeah, say thank you, Lord. You answered my prayers to some extent. And what happens, of course, is all these people are selling. So everybody is up here is selling into this, right? This is the exact pattern. And it puked things right back down to this low, right? Does that answer your question completely and thoroughly, Andres? So yeah, so my call that day was, yeah, we're gonna sell off from that gap up, and that's one of those fairly obvious patterns to me. Yeah, you're quite welcome. Oh, thanks, Jay. Yeah, the gold miners, gold stocks. Yeah, I did not participate in my long-term account with those. I decided not to, but they did do exactly. It's one of those things you can't do everything. But yeah, matter of fact, they had some really big moves. Some of them, some of the gold stocks. Yeah. And I think you had those too on your, because I think you talked about those before, both weekly and daily. They kind of coordinated very nice. Other questions? We have time for a couple more questions if you'd like. Part of this was advertised to say, hey, just kind of an open talk. I usually pick a topic. I did that. So any other topics you want to discuss? Wednesday is going to be trading stats, and after that, we're probably not going to have an event until Friday, June 4th, which will be another event you're all invited to, which is the Introduction to Mastering Technical Analysis class. If you've never been to that, I suggest you put that on your calendar. It's a 4.5 hour class Friday afternoon. You will all be invited to that. It actually is the first class of the seminar program. You're not all invited to the seminar program, but you're invited to the first class. What else you guys got? That is a big thing, Eric. There's no doubt is something that's going on. But let me, for everybody that's here, let me give you a quick summary. Well, Stephen, Stefan, this will also take care of you too. And I put this in the little weekly market summary that you get over the weekend. And it is just, in my time in the markets, I've been staring at charts every day for 20 years. And not for you to take this in the wrong vein, but there's not a person I would listen to anywhere on planet Earth about economy, markets, chart, nothing. There's no person in the world I would listen to. I only listen to me. I've been staring at charts every day for 20 years, and I feel very in tune with them. And I have to tell you that over this whole 20-year period, this is the wackiest time in history. This is probably the wackiest time in the history of the stock market, I would even say. Everything else is understandable. The crashes, 29, crash of 2001, 2000, crash of '08, they're all completely understandable. Right now you have the most unusual situation ever in history. And that is that we had this whole pattern interrupted by the virus with the shutdown that plunged the market in an area getting close to where it should have plunged on its own, just like in '08 or in '01. But on the other side, we have something that's unheard of before. There's money being poured into the economy, just hand over fist in barrels. And that money, of course, creates demand in the stock market, whether it's poured into the market directly or indirectly, doesn't matter. And you're seeing incredible demand from that money, which makes when what you do in reading charts is always measuring the balance between supply and demand, which is to say buyers and sellers, support and resistance, whatever you want to call it, it's all the same thing on a chart. And when the demand is infinite, it makes any kind of a top very difficult because the top won't be there until the money dries up, right? So what I suspect the only way that we will see a top is to have a blow off top. And I've mentioned that. I mean, I not just, obviously subscribers get more information on what I'm thinking and stuff, but even in the market letters and in free events, I mean, even in the weekly market summary that you all get in the free events, I've mentioned before that I think the only way we're going to see a top is to have a complete blow off top to let all this money come into here. Now, the reason, what's troubling is that all the money coming into here is being met with big money selling. They're using this to sell. How do I know that? Well, because normally sector rotation is a long event. In other words, when big funds want to buy, put their money to work, they have billions of dollars, right? They can't go buy one little stock like you and I might do, right? They can't go buy AUPH, a little biotech. They can't put billions of dollars into that. It's impossible. So they typically have to buy sectors. That's why sectors are important. The other names aren't important in terms of some of the names that brokers may use, like bargain stocks or cyclicals, all that. They're just household names. But the sectors are what really matter. And the sector rotation, meaning money going in and out of sectors, usually takes place over weeks because they can't come in and put $1 billion into a sector in one day. So we see sectors go up for weeks, and then they profit take. And as a matter of fact, this is where you will usually see somebody come on CNBC and say, "Oh, we really like the semiconductors right now," blah blah blah. And of course, they like them because they've been buying them for 4, 5, 6, 7, 8, 9 weeks, and they create demand for them. And this is why when you listen to TV, you have to remember nobody is on there to help you; they're all there to help themselves. So all these guest speakers, they come on and they say, "Oh, and they'll say, well, we've been buying semiconductors," so everybody thinks, "Oh, gee, I'll go buy semiconductors." Well, you're buying of semiconductors is what they're selling into, and it takes place over weeks. And what you're seeing now is that you're seeing very, very fast. I mean, money is going in and out of things at a very fast clip. I mean, look at the financials, look at semiconductors. They're just bouncing all over the place, which to me is an indication that we have unlimited money coming in, and big money is using this as an excuse to sell. So when you see the money dry up, I think it'll happen. And there's another event I did that talks about how the 3 ways that tops are formed in the market. And every major top that's formed since the crash of '29 has all been the same type of top, and they're very easy to identify, and they usually know the top literally to within a week. But there's 2 other ways the tops can form that are much more difficult, and I'm hoping that we get that big surge. In other words, big money sells enough that they're comfortable, they sit back, and we see just a big surge come in. And I would call it the surge of idiots at that point. And that's when things dry up, and that's when we can react. But until then, things are very choppy, they're very back and forth. If this becomes a top, it's going to be much more difficult to trade. And that's why what's helpful is not in situations like this to try and find the top, but to trade around it. In other words, to both be able to benefit from moving higher when we do, but yet also to be able to benefit if we move immediately lower. Wow, that was a long speech I just gave. Well, yeah. Well, Peter, if you look, also at this point, Peter, is when you bring in the small caps into the discussion too, because there is some truth to the concept that the small caps lag on the way up and lead on the way down. And the reason is because when money comes into all the big name stocks, at some point they just become so overbought, that big money says, well, this is getting tough to do anymore. And the money filters down to the second tier stuff. And that's why small caps lag on the way up. But then if there's fears the market's at a top, guess what you want to get out of first? The crappy little small caps. So the small caps are showing relative weakness, which is a small sign. The QQQ and the SPY are very different patterns right now, Peter. They're just different. And that is just a reflection of the tremendous sector rotation. So when it's different, it means things are choppier, and it means that you could be in a wild whippy type of top. Big money is using this buying spree across all sectors, Tony. So it's not just the QQQ. I mean, there was a time not long ago where the QQQ was leading. In other words, they're buying semiconductors and dumping oil stocks, right? Which is kind of more pro QQQ and negative SPY. So just around the rotation is such that the QQQ is lagging tremendously. So, and this is where you start to do your real analysis to say, if you want to be bullish in the market, to see that surge come, to participate in it, you want the QQQ to break its resistance, to head higher. If you want to be bearish, the next clue would be for the SPY to break down and then not see the money come into the QQQ. So it's kind of a bigger picture concept. But obviously, and what we saw Friday was actually, it was Thursday afternoon was miraculous to me. Thursday afternoon is what I call the PPP. Anybody know what the PPP is? Yeah, the Plunge Protection Team. Actually, it's the PPT, I guess, isn't it? PPT? Plunge Protection Team. Yeah, which is my funny way of talking about just all the money being poured into the economy. And I guess you could also include the Robin Hood traders, if you will, which is synonymous with the E-Trade traders of 1999, 2000, 2001. That to me was a big event. Thursday afternoon. Thursday afternoon should not have rallied by all technical understanding. So where we really learn a lot is when the chart does something unexpected. We don't like it the moment it happens, but a failure of a very, very likely event tells us something big. So you don't like it when the failure happens because you may be, as a matter of fact, to me, it affected me kind of because Thursday afternoon, I was really having a good afternoon and I was all short. I was on what I call a walk away shorts. I had like 3 shorts open and they were all doing nice. And then we started to fall and I was doing really nice. And then I come back and we rallied huge. And that to me was extremely surprising. At a very high confidence level, we would continue to drop into the close. And that failure to go lower, and that's why I was very bullish going into Friday and actually set up to enter long-term positions long, assuming that this may be the beginning of the blow-off top. So whether or not it's just complete slop out there or we're about to push higher is something we just have to analyze every day. But I do want you to keep in mind, this is a once in a century thing going on. Nothing changes in terms of what we do. My focus has been much more, my focus is always on individual stocks, finding those unique things that stick out. And as a backdrop, I always use a bias, a picture of the market. And lately, that backdrop has been less important to me. You look at the charts on my screen, they're typically not even doing what the SPY or the QQQ are. They're just doing their own thing. I think that covers us for today. I didn't see any other questions while I was typing. It is 9:45. I suggest we all get on with our Saturday. I hope you did enjoy today. All right, guys, have a great one, and we'll see you guys in the trading room Monday. And next, the rest of you will see, there may be a Monday scanning night coming up. Otherwise, we'll see you on Friday for the Introduction to Mastering Technical Analysis class. Have a good one, guys.